The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. All right, we're going to jump right in here and take a look at this was a chart that was on CNBC this morning that basically shows the relationship to the advanced decline line to what's really been happening in the stock market. Needless to say that stocks can still go up because there's about 150 of them that run the whole show. That's what's continuing to happen. So we'll watch, how this unfolds. But I still believe we're getting ready to roll over in here. Remember that there is a strong positive bias for the market to rise during the last three trading days of the month. And we trade into New Year's Eve, of course, which is Thursday, and then the first two trading days of the new year. But remember that we do have some negative aspects from the Bradley model that should be kicking in here pretty soon. This was the information that was sent to us by Shane Smolian from the Wolf Trader, and as you'll notice that this starts to roll over now, and we should be heading down into January 6th to 7th, that area. And then we'll see, what the market will do. The first 7 or 8 days of January do have a negative bias, and then we'll take a look at it after that. But just really, we go down 20, up 20. Nothing really changes. It just keeps jumping around the same way that it always does. We've talked about these stocks called FANGs, which is Facebook, Amazon, Netflix, Google, and Starbucks. You could certainly put in one of those other Apple in there, and those are the ones that are really running. But Apple has really slowed down quite a bit. It gets more free press than anybody, but Amazon is catching up with them with the free press because they're doing such a tremendous business. I hate to think what's going to happen. Well, why should I hate to think? I'm not involved in it, but when Amazon finally starts making consistent profits, not just from their cloud, they offer everything but free clone delivery, and they'll probably offer that pretty soon. But, they are really an easy place to shop, folks. Anybody that has ever shopped on Amazon knows that it's pretty simple, and they got great return policies and stuff. So you have to give Bezos a really... someone's Apple gets more free press than Trump. I don't know if that's the case, Tucker, or not, but it's pretty close because Trump sure gets a lot of free play. I frankly, I'm not into politics very much. I guess I'm a diehard Republican, but the thing that's interesting, I think we need somebody in there that's not a politician, for God's sake. That's basically what I think we need, but that's neither here nor there. That's basically it. I don't know. We'll see. But I know some of the stuff that's going on with these fear tactics that they're putting on us is the same crap that they laid on us with the weapons of mass destruction. If you can remember that, we had weapons of mass destruction. There weren't any there, but did anybody ever pay a price for that? Absolutely not. But that's politics, and that's what you can do. So we'll see what's going on. We have a lot of problems in the country, but we live in a wonderful country, folks. There's a lot of good things here that we certainly have a whole lot to be thankful for. Any of you that travel abroad, and Sarah and I do that, 3 or 4 times a year, one of the most exciting things that happens on our trip is when we come back into the United States and you see that big green sign with the eagle on it says you're now entering the United States of America. It's pretty hard not to get goosebumps. That, especially if you've been gone more than 3 or 4 days. It's always good to know that you're back where you're going, what you're going on. But we've lost a lot of people in these wars, and we should remember them. I have a interesting thing that I see that they're going to give the people that were in the towers in 9/11 are each going to get, I think, 10 or 11 million dollars each. Oh no, not the Twin Towers. They only got $4 or $5 million each. The people from the Iran war, 30 some years ago, are going to get $10,000 a day. There are not many prisoners that wouldn't take that deal, but I think that's high myself. $10,000 a day. I'm sure they deserve it, but that's seems like an exorbitant price for spending 480 some days. I believe that we should be. I got to get off this doggone soapbox, Larry. It must be the end of the year. I should be soldiers of the country, man, woman, and child, just like Israel. We all are members of the army, and that's how we should be treated. Okay, let's get to the markets. We've already talked about the first chart that we've seen in here. I promise to go over. I don't drink, but I'm thinking of it if I keep this stuff up. I want to go over some of the Bradley years just to show you that, it does have some really good things going for it. We'll go back to 2013, and if I can get this to pop up, there we go. And Well, this was the model that we get. Remember, you can do this. They can do this model 100 years into the future if you want to. And as you can see, from January to May, this thing was nearly perfect. And then you see it inverted, then went sideways for quite some time. But the first 6 months of the year, it was nearly perfect. And if you flipped it over, it still did pretty good because it actually inverted back on May. But you didn't know that that was not occurring because you see up until June 24th it was following perfectly, and that's when the model inverted because it went up from June 24th into July. You could see that there was no longer a correlation there, and that's where you would want to flip the model over. But the dates were good, the overall trend was good the first 6 months of the year, so that's the type of thing that you're looking for. Now if we go to the next year, which was 2004. The reason why I'm bringing this up, people are asking me about, history of this darn thing, and I've looked at, between Jim Twentyman and I and Dr. Ruth Miller, we looked at every year from 1885 to today, and this has a very high correlation, better than anything I've found to predict the market. Here in 2014, you can see we had the early January rally. We bottomed in February. Right around February 3rd. And again, here we rallied all the way up into July, where it was following very, very closely and even to the downside up until October. And as you'll notice, when we made that October low, October 14th, where we came down to a 786 retracement of the year, and that's when the market flipped. And again, we had a pretty good high forecast into December, a really nice low in December, but the hits were relatively good. And remember, this is done long time in advance. I mean, it's not using anything other than the weighting of the cycles of the planets that we're looking at. And then we have for the final one, we're going to look at 4 years this year. We're looking at the 2015 market, where you can see we did bottom in December. We didn't get the exact bottom here that we were looking for to come in around November 10th. It actually bottomed around December. Again, we went up into May, and it would have kept you short all the way into September 28th, when we had that super full moon, and then the market had a big rally from there. So it does a really good job of picking the trends. It's very good at the dates that are involved. It does really good with the short-term trends, and the last thing that it does on an overall picture, it does a pretty good job, better than 60%, and that's far better than a coin flip if you're looking at some of these markets that we've been looking at. Now I've had a question about the gold and silver market. I want to start out with the gold. Well, let's start out with the silver market because we did that one yesterday, and I wanted to bring this up to show you that this is what we were looking at as of right before the holiday. We said that the silver had to get above the 1455 level. That had to break that 786, and that had held for 5 days. And now the market came all the way down yesterday into that main support at 1390, which it's held so far. Now, if we take a look at the gold market, which is the bigger market of the group, you'll notice we've mentioned these numbers of 618 and 786 for quite some time. And if you look at gold over the last 10 days, you'll notice that all of the rallies here have either been at 618 or 786, including the one that we had last night. That tells us that, we've come down again very sharply from that level, about $8. Excuse me, about $7 in just a matter of a couple hours. That tells us that we are going to get down most probably to that 1060 area, which is the 61% retracement of that whole move from 1047 up to the 1084 level, and then back down again. So that's the one thing that we're watching. Again, we're in a very, very low volume trading because of the holiday season and stuff. So we got to keep that in mind, but we're going to be looking at it. We've had a question posed about the grain markets. We've talked about this several times, folks. I still think we've got a pretty good bottom coming in grains, but there's no pattern here that I can find at all in wheat, corn, or beans that tells us that we want to start accumulating from the long side at this particular point. I really don't think that is that's in the cards, right now. But later on, after the first of the year, the people start, planning for, spring planning, and then they look to see what their needs are going to be, and then we'll move on. We still have a, deflationary scenario across the markets. You can just look about any of them. I mean, they're all drifting lower, and that's pretty much it. Now, we do have to spend some time talking about the oil market today, folks, because things are happening there that I think we have to pay attention to. There's several things coming in the news today. One of them was that Iran's going to come out and start dumping oil into the market, and their cost of production is $1. Well, if their cost of production is $1, it's the same oil that's over in Saudi Arabia. So there's no difference in that. They've got to get it out of the ground. And remember, when this stuff was $1, excuse me, $140 a barrel, everybody was looking at 200, and now we're at 37. And everybody's looking at $15 or $20, and they might get it. We don't know, but I'm just saying that the market's starting to act like it wants to give it a little bit of room here for some more of a rally. Remember, we're $3 off the bottom, and they keep bombarding the markets every day, with how much lower the oil is going to go. And we've had some pretty good energy related rallies in the natural gas in particular, and so there is a potential here. And hey, all I'm looking for is a really strong bear market rally, folks. That's all I'm looking for. I'm not looking for $150 oil or anything like that, but I think we could get easily back to $50 a barrel without any trouble. And if there were any types of skirmishes that happened during these holiday seasons, we could really have a run. But market is extremely oversold, and on the bearish front, there's a lot of people that are out there that are very, very bearish. And if these things start to, see what's happening, you're going to see a pretty good rally, if we'll see. But the news is bearish again, and then it's also rallying a little bit, so we'll wait and see. We're going to be right back, and we'll get ready to talk about the stock market, because we're going to be rocking and rolling today, folks. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look at the currency market here. In particular, we're going to look at the British pound versus... One second, please. We're going to take a look at the British pound versus the U.S. dollar here. And as you can see here, we had a lot of patterns forming down here at this 158.50 level. We rallied a little more than 100 pips these last couple of days. And then with today's action starting last night after we hit the 149.80 level, we've now broken down and we are trading below the 1.27 level now at 147.70. Which tells us that this pattern probably only worked for a few days, and we could be heading down, a lot lower. This is one of the advantages of trading foreign exchanges. These markets are so huge. They are thousands of times bigger than the commodity markets. Particularly the S&P that people get infatuated with. The pound and the dollar and the US and the euro versus a dollar are far much easier for trading vehicles than the stock indices are. You remember the stock indices are regulated futures exchanges, whereas the foreign exchange is not regulated. They regulate it a tiny bit for margins and things usually, but it's pretty much at the discretion of the banks how they operate, because this is how the banks move their money. But it's a tremendous market to trade. It hasn't been very long that we've had access to this. For the first 35 or 40 years of my trading, unless you had a very large account, you did not have access to foreign exchange trading. And I've been doing foreign exchange trading ever since the D-Mark was 25 to the dollar, way back in 1972. So that's been a long time, but now it's really good as far as trading. But it's a fun thing to trade. But what you've got to be able to do is to understand, some of the things that are intrinsic, to the foreign exchange market. First of all, they trade 24 hours a day, 5.5 days a week, and so they start trading Sunday night around 2 o'clock in the morning. Oh, so let's try that again. Sunday afternoon, about 2 o'clock in the afternoon, you'll start to get your, let's try that again, Larry, 4 o'clock in the afternoon, Eastern time, you'll start to get your first quotes coming in from Asia and Australia. And then the big market occurs when the foreign exchange opens in London at 8 o'clock London time, which is 2 o'clock in the morning, New York time, and that's the opening price. That's when the real action starts to rock and roll, and it's you use that as a fulcrum to what's going on, because it's a really key figure, to watch. But anyway, that's the British pound of what we're looking at. The euro got up almost to that 110 level that John Logan talked about. I got up to 109.92. We've broken about 80 pips from that level. And we're probably heading down to test the 108.40 again in the euro, one more time. A lot of this is, year-end dressing, of course. And believe me, the foreign currencies, for some foreign currencies of countries, they have really dramatic moves in that first week of January. And we've got some of these that, are really poised to do something, really dramatic. We've had a really nice bottom that has been forming in the Australian dollar that we've mentioned, several times. And someone's asked me to bring up the euro, and I wanted to bring this up, and you'll see that this is what we've been watching here. This is a daily chart on the euro. We're still in a really strong downtrend, and as you can see, that 110 level held major resistance. Now, there's still a chance that we could get up to this 111 area. Rally, we're trading at 109.20 right now. We could still rally a couple hundred pips on some kind of a news and get up to this area of 111. Boy, that's the place where you really want to look at the short side of the euro, because you're in a really nice downtrend that would be formed by perfect 61% retracements, and those make for very good spots. And as you can see, the bottom that was down here when nobody wanted to look to buy this stuff, you'll notice what happened on Fed Day. The market moved $4,500 in a matter of about 4 hours, and and on the pullback, it only backed off to the 38% retracement. So it still has a little bit of a positive bias, shorter term. Longer term, you can see the trend is decidedly down, and the weekly chart says that we're probably going to be looking at par sometime in 2016 in the euro, and anything below 100, all bets are off, because you could be looking at something a great deal lower than par. Remember, we got down to 82 back in 2000, in August of 2000. That's when they really were pumping the euro, 99 and 2000, when they're really bringing out the euro, and we got down as low as that, and we rallied from that 82 all the way up to 162, and then all the way back to 85 again. So this thing has really wild swings, which is ideal, for what we're looking at in some of these markets.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, boys and girls, it's up and away on the U.S. stock market today. We've got the Dow up way over 100 points today, and we have the S&Ps rocking and rolling also. So we're going to be moving here up to the upside, at least to begin with. So we'll see. Right now we got the futures up 15, 16 points in the S&P. The Nasdaq is up 33, and the Dow Jones is up 150 in the futures. So the interesting one here is that from a perspective of technical things, I want to cover CMG, Chipotle Mexican Grill here, but I wanted to bring something to your attention here on the Nasdaq, because we have a really important number that we're trading at right now here in the Nasdaq. It's up at the 786 retracement of the whole move that we had back here just a few days ago. So watch it real closely. We need the NASDAQ to break out. It needs to get about another 25 or 30 points higher than where we are right now, which means the Dow would be up over 200 points on the day. And it's certainly possible because we have a positive bias for people owning stocks the last few days of the month and the first few days of the new month. So that's a possibility. The patterns are telling us on a longer term basis that things are a little negative, but these markets move really quick. I mean, we go down 500, 600 points in 2 days, and in 2 days after that, it comes right back, to the same area that we were before. So we want to watch it very, very closely. Now, I wanted to switch over to that Chipotle Mexican Grill. I had several people ask me about that, and all I was watching, folks, is I was pointing out the fact that we were making a technical pattern known as the 3-drive to a bottom pattern. This was highlighted by Gartley in his book in 1937. It was also highlighted by Jesse Livermore in the 1930s, and also by a man named George Cole in a book called Keys to Speculation that was in the 1920s. I got that book from my good friend and mentor, John Hill, and that was one of the books that, gave me the patterns that I look at. But this is a tremendous pattern here, and what happened, the market closed Friday at 495, and then yesterday it backed off exactly to the 786 retracement of that last 2 days range at 485, and now we're trading above the high of yesterday at 497. So that tells us there's a probability here that we've got a pretty good bottom, because this took really bad news yesterday, folks. They had another outbreak of E. coli in one of the restaurants. I think they've served it on the menu, but they forgot to put a price on it, would be my guess. So that's a bad joke. At least no one's died as of yet. That's the good thing. That didn't happen with Jack in the Box many years ago. They had really bad situation where several people actually lost their lives from E. coli, and it's nothing to take lightly because it's a terrible disease. It's actually normal to us. It's when it turns virulent that it gives it a real problem. But anyway, this is what it looks like. We could easily get a rally of 70, 80, even $100 in CMG just on short covering alone. That's the bottom line of what we're watching here when we're looking at some of these things. So keep in mind that that's what we have going on. We've got a nice little buying going on early this morning, which we have this more than anything else. So we're anxious to see what's going to happen with some of these other things as they move through the day, because the early part of the day has a tendency to be a short-term top or short-term bottom. I don't know what the infatuation is with the grains here, but I'm getting more questions about the grains than I am in just about anything else. And we're just not quite ready, folks. First of all, I'm looking at it very, very closely because we're at the end of the year, which is the time when these grain elevators are, not fixing their books, but balancing their books, and they're getting ready for the next year's planning intentions and all this stuff, but it's still not ready. So, focus on what's at hand. I mean, we've got some major things happening in the stock market, and we really want to be able to, focus on, what's going on with that. So just keep an eye on that. That's where the prize is, I believe, because if this thing does get to a point where it's going to turn, then we'll be able to look at that, very, very closely. Now, the Treasury bond market, it's been under some pressure, and they're talking about the market in other things that are moving around, like the corporate bonds and the things like that. So we'll have to see what's happening, with the bond market here. Now, we got a really good chance. I believe what we're doing right now is we're making a shorter-term test on the bond market down here at the 154.22 level. Is the 61% retracement of this last move. So we'll have to wait. So can you hold on with me 1 second, please? Okay, and then we'll take a look at the Treasury bond market here, and we'll see what's happening with the bond market if we can hold this level around 150 for 20. But a longer term, the bonds do look more bearish than they do bullish. Longer term, we've had longer term lower tops, lower bottoms. This market is certainly in a downtrend, and remember, we have higher interest rates coming from the Fed. And that tells us that we're most probably going to be looking at some interesting moves, at least from the standpoint of to the downside, higher interest rates. Whether that have any effects on stock, I don't know, because the VIX index tells us that there's absolutely no fear in the market at all. I mean, there is no fear in the market, and that's, it's really quite amazing to see, what's going to happen. Okay. We had a question about Apple. Folks, Apple, I think, is underperforming the market. I don't think it's going to change. It's getting all kinds of free press. I mean, we have Tim, what's his name, Cook on CNBC. He was on 60 Minutes, and, they're on the news every day, as is Amazon. So all of that is, telling us that we have a tremendous amount of free press, but, they still keep pumping it. But it's a great product. I don't think there's any question about that. But the stock is acting, less than the market. I really believe that there's a real opportunity coming here in the next. I don't know how long it's going to take here, but I want to take a look at this Japanese yen. I love looking at these currencies because that's where the real fun is: the euro, the yen, and the pound. And as you can see, this long-term weekly chart on the dollar yen that we talked about yesterday, we're right. We could get the yen to back off, or the dollar to back off into that 114 or even 110 level from where we broke out of, way back, or where we broke down from, 5 years ago. That would offer, some pretty good support. That would be a 382 retracement. This whole move that we've had over the last 4 years, because we have not had a major correction in this currency since 2011, when we backed off to the 38% level, when it was down around 85. And as you recall, this was Tom O'Brien's call to fame, his King Dollar, and that has certainly been a good one to play. So we need to watch that very closely, because at any time, we could be looking at something, really significant to make this thing move. But we have a lot of bullish enthusiasm, folks. I mean, the market goes down 20 points yesterday in the S&P, and you turn around and it's up 25 points. So there's people in there willing to buy it, and that's the bottom line. You can't stand in front of it. That's that's the nearest you can tell is what's going on with some of these things. So we'll watch it very, very closely, and we'll see what transpires with it, and then we'll go from one to the next. That's all you can do. The main thing that I'm watching today, folks, is I'm a very bullish crude oil, and I'm very bullish the Canadian dollar, and both of those have been acting very nicely today. And I think those have a chance to rally a little more. Certainly the risk here is very, very small. And again, we have a situation where the news is just so incredibly negative that it's just really amazing that you can't be able to do this. I'll be able to see it. Okay, someone's asking me a question here about another dollar index that weighs the major currencies against the others. Dr. Scott, I don't know the answer to that. I try to keep this as simple as possible, and I look at the 6 major cross rates against the U.S. dollar. I maybe trade the dollar index twice or 3 times a year, because really, when you're trading the dollar index, you're looking at the dollar versus the euro. And believe me, with the Chinese yuan coming into the picture pretty soon, you're going to see some pretty big swings in some of these other currencies that might come out, because the yuan is going to be coming out at probably 6.5 to the dollar. And that's a big discount from when I first started, going over to China and lecturing about foreign currencies and, and commodity markets to the universities there in '96. We were trading at around 13 RMB to the dollar. So your dollar bought a lot. Now it, buys a whole lot less. still better than most places, but it's still, a lot less. But anyway, get back to the question that I'm talking about, and that is that the Canadian dollar has some real potential here from the equal moves that we've had over the past 15 years that we pointed out several times, and we've already completed that. And then today we made a 61% retracement of the last move down, and whether that's going to have much of a factor on this or not, I'm not sure, but we'll see, very, very shortly if that's going to be the case. We're making new highs now in the stock market. It looks like we're going to have an up day. There should be some resistance probably at the 272 level in the S&P. That's that old high in there, and we'll see what happens with the market, from that point, and we'll notice what's going on. The gold market still hasn't done anything yet. We need gold to get above the 1078 on an intraday basis in order to really give it a little bit of a push. But I'd prefer to look at gold as a potential buy down around the 1060 level. That would be a 61% retracement of the last move down that we've had. And so that's what I'm going to be keeping an eye on today. But this is a holiday week. This is probably as much of a holiday week as we have at Christmas time, and we are open all day, I believe, on Christmas or the New Year's Day, New Year's Eve, and that's mainly because of the tax selling stuff. That's out of the way. But I don't know why we're open that all day that time, but it seems that we're going to be open anyway. At least we closed at half a day at Christmas time. Okay, now let me see one other question that someone had. Oh, someone asked me a question about why I like trading the euro. I've mentioned this many times, folks. It's thousands of times bigger than anything you trade. I don't care what you trade. The euro you can throw anything at it. There's no foreign exchange. The foreign banks can play with it a little bit, but there's too many people in there swinging big sticks. So it's got a really big, really good chance, for potential of looking at these things. So we'll see what happens. Anyway, we got the stock market still really strong the first hour. We're up almost 200 now in the Dow Jones, which is a pretty big, up 170. And we'll see what the market's going to do for the first part of this, and then we will go on to the next one, and then we will see what is the next trade we'll be watching. The bonds and notes are still, weakening up. So it looks like we are going to have a pretty good, at least the first hour of trading is going to be really interesting in the stocks, and then we'll find out what's going to happen, with that after this first hour is done. Okay. All right, now we got to move on to silver. Silver's still backing off, folks. It's got to get above 1455 in order to reinstate the bullishness, and that's the main thing, to really keep an eye on from what I can see. I don't think there's anything that's going to change with that, but we'll have to look at what's going to happen, with that. All right. Let me see, one other question. No other question. Okay, I get back to the Bradley model. I had more questions about that along with some of these other things that we talk about. The Bradley model is a cyclical model, folks. That's all it is. It's based on numbers. There's nothing esoteric about it. I mean, just because it's astrological, it's all number related. This was done, by a man named Donald Bradley back in 1946. The little book was published by Llewellyn Publications. It was $4. Back in 1986, when I first started, publishing the results of the Bradley model, the price of the book skyrocketed all the way up to $150 or $200, and then people started to, copy the paperback because Llewellyn had been out of business for many years, and there was no copyright on the book, and so that's how they moved that. They move the price around. Now I don't know what you could buy it for now, but it's only, I believe it's only 48 pages. But it's quite technical. You've got to be able to understand what some of these things are about in order to to really understand what you're looking at here. So keep in mind that that's really what we're looking at. We're going to take a little break here and we'll wind up the show. Wow. Oh man.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we'll wrap up the show here till tomorrow. We're having another strong day. The Dow's up 170, the S&P's up 20-something, and the NASDAQ is screaming also. So just remember that the market that can give you 180 points can take 180 points away from you. So we'll see. But we've got the main stocks of the NASDAQ are really rocking and rolling today, folks. We've got Amazon up another, it looks like another $10. So the whole world is, buying that. We just made new highs in Amazon. I was really surprised about that, but we did, and we'll see what's going to happen. We've had some major problems. What am I talking about? Give me a second here so I can pull up the chart of the Amazon long term, because we're up in this 1086 area. We're 1084 right now, and that was the really long term ABCD patterns that measure up in that area. We'll see what happens. You don't get a big 200 points up and 200 points down very often in the Dow. That's a really outlier event, so you can't really depend on it. But when you're really bullish early in the morning, that's the worst time in order to be when you're buying a big gap up opening, because gaps have a tendency to be filled, and you want to be watching it. Now, this also reiterates what I talked about yesterday, in the fact that the German DAX has been leading this. I mean, this is what really pushed our market higher, was because of that, and we'll see what's going to happen. Someone's asking me about a trade of the year for 2016. I haven't done one of those for a couple years. I did them for 10 years, and I was right 8 out of the 10 years. And then I had 2 years that were break even. That's something to think about, is a trade of the year for 2016. So we'll take a look at that maybe over this weekend, and we'll look at something potentially as a trade of the year. I've had some really big ones, folks. I bought the Nikkei when it was down around 7,300. I think that was 2003, and I had soybeans and a whole bunch. Someone asked me why I stopped doing the trade of the year. Well, first of all, when I do a trade of the year, someone emails me every day to ask me if it's still in effect, and unless something changes, I don't really say very much about it. But that's, neither here nor there. Okay, we'll take a look at that trade of the year. Maybe it's something to do.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.